Takaful is a cooperative system of reimbursement or repayment in case of loss, paid to people and companies concerned about hazards, compensated out of a fund to which they agree to donate small regular contributions managed on behalf by a Takaful operator. It is defined as an Islamic insurance concept which is grounded in Islamic muamalat, observing the rules and regulations of Islamic law. This concept has been practiced in various forms since 622 AD. Muslim jurists acknowledge that the basis of shared responsibility laid the foundation of mutual insurance. Islamic references: these fundamentals are based on the sayings of the Islamic prophet Muhammad. Based on the hadith and Quranic verses mentioned below, Islamic scholars have decided that there should be a concerted effort to implement the concept of takaful as the best way to resolve these needs. Some examples are, basis of cooperation, help one another in al-birr and in al-taqwa, but do not help one another in sin and transgression. Quran 5:2, God will always help his servant for as long as he helps others. Basis of responsibility, the place of relationships and feelings of people with faith, between each other, is just like the body. When one of its parts is afflicted with pain, then the rest of the body will be affected. One true Muslim and another true Muslim are like a building, whereby every part in it strengthens the other part. Basis of mutual protection, by my life, nobody will enter paradise if he does not protect his neighbor who is in distress. The fundamentals underlying takaful are very similar to cooperative and mutual principles, to the extent that the cooperative and mutual model is one that is accepted under Islamic law. Some Muslims believe insurance is unnecessary, as society should help its victims. Others believe that Muslims should not ignore the fact that they live, trade and communicate with open global systems, and the need for banking and insurance. They believe in creating Muslim-friendly banking systems and a workable insurance framework by which Muslims can compete with non-Muslims in business and have coverage in daily life. Principles: the principles of takaful are as follows. Policyholders cooperate among themselves for their common good. Policyholders' contributions are considered as donations to the fund. Every policyholder pays his subscription to help those who need assistance. Losses are divided and liabilities spread according to the community pooling system. Uncertainty is eliminated concerning subscription and compensation. It does not derive advantage at the cost of others. Theoretically, takaful is perceived as cooperative or mutual insurance, where members contribute a certain sum of money to a common pool. The purpose of this system is not profits, but to uphold the principle of bear ye one another's burden. Commercial insurance is strictly disallowed for Muslims because it contains the following elements: al-gharar, al-maraisiyah, riba. There are four models of how takaful can be implemented. Mudharibah model, the manager are sharing profit and losses with the policyholders. Used initially in Far East. Wakala model, agency fee, received upfront from the contributions and transferred to shareholders' fund. A combination of both, Bahrain, UAE and Middle East countries. Al-Waqf model, mainly used in Pakistan and South Africa. Part of the contributed capital is irredeemable. Takaful companies, the growth in demand for Islamic insurance over recent years, has seen a proliferation of new companies offering Islamic insurance products in these markets. The majority of these firms are full-fledged takaful operators, but conventional insurance companies have also entered the market offering takaful window operations. As with the traditional forms of insurance, reinsurance of a takaful operation may be used, known as re-takaful. The Mudharibah model, according to this principle the al-Mudharib accepts payment of the takaful installments or takaful contributions from investors or providers of capital or funds, acting as sahib al-mal. The contract specifies how the profits from the operations of the takaful is to be shared in accordance with the principle of al-Mudharibah between the participants and the takaful operator. The sharing of such profit may be in a ratio of 50-50, 60-40, 70-30 and so forth, as mutually agreed between the contracting parties. In order to eliminate the element of uncertainty in the takaful contract, the concept of tabarru is incorporated. Relating to this concept, a participant agrees to relinquish a certain proportion of his Takaful installments that he agrees or undertakes to pay, should any of his fellow participants suffer a defined loss. This agreement enables him to fulfill his obligation of mutual help and joint guarantee. In essence, Tabar enables participants to perform their deeds in assisting fellow participants who might suffer a loss or damage due to a catastrophe or disaster. The sharing of profit that may emerge from the operations of a Takaful is made only after the obligation of assisting the fellow participants has been fulfilled. It is imperative, therefore, for a Takaful operator to maintain adequate assets of the defined funds under its care, while striving prudently to ensure the funds are sufficiently protected against overexposure. Therefore, the provision of insurance coverage in conformity with Sharia is based on the Islamic principles of al-Takaful and al-Mudharabah. Al-Mudharabah is the commercial profit-sharing contract between the provider or providers of funds for a business venture and the entrepreneur who actually conducts the business. The operation of a Takaful may thus be envisaged as the profit-sharing business venture between the Takaful operator and the individual members of a group of participants who desire to reciprocally guarantee each other against a certain loss or damage that may be inflicted upon any one of them. References. Sources: Shakib Abuzaid, Presentation of the World Islamic Insurance Directory at the World Takaful Conference www.takaful.re